Well, I'm sitting here with Roy Sebag, and Roy is the CEO and founder of Gold Money. And most of you probably know by now that I recently announced that I was merging Schiff Gold with Gold Money, and that the two of us would join forces to help revolutionize money. And in fact, normally when you talk about a revolution, you talk about progress going forwards, but we're actually going backwards to something that's really worked, which is gold, but then modernizing it for the modern era and actually making gold work better as money today than it did 100 years ago or 1,000 years ago, because with the technology that gold money taps into, today is actually the best time in history to be on a gold standard. When people try to say, oh, gold standard doesn't work, it's old fashioned, they don't understand gold, they don't understand money, and they certainly don't understand money substitutes, the fiat currencies that people are using today instead of money. And one of the reasons that people do that is because government really monopolized money. They made it more convenient, but they also codified it into law as legal tender. They accept it for taxes. But it has a fatal flaw in that it constantly loses value. And you can't really have money that loses value over time. And the problem is, the decay curve, I believe, is about to rapidly accelerate, where you're going to start to see money losing value, not over years or decades, but over days and weeks, as central bankers continue to prevent this massive financial bubble from deflating. So I think this is really the time for gold money. And what I'm so excited about is that gold money is actually enabling all the things that I've wanted for gold. I mean, I've been selling physical gold for a long time, but I've always known that gold could play a much larger role in my clients' lives. And a lot of the things that I, would think about at night that could do with gold, gold money is actually making all that stuff possible. So let me introduce Roy and let him talk a little bit about the company and kind of address some of the concerns that my clients have, because my clients want physical gold, and they may initially be skeptical of gold money, but let Roy explain why gold money is physical gold. It's not some kind of third party. It's not paper gold. It's real gold that you own. It's just that you have a lot more liquidity and it's a lot more convenient to use.
Yeah, thanks for having us here. It's been great to catch up in person again, and I think that the most interesting way to look at gold money is as essentially an operating system for your gold that's enabling you to hold physical gold. Before we built this technology, physical gold was somewhat inaccessible to most people. You had to buy in large denominations. You had to pay for your own storage, your own insurance. And once you had the physical gold itself, it wasn't transactable. You couldn't spend it. You couldn't go to the supermarket and use one of these to purchase some coffee. So what we looked at is, how do we take gold, as you said, from the idea of gold as money, it has always worked throughout history. It's really the last 50 years that we're living in this financial bubble, this money bubble, so to speak. And I think that we've seen this trend with some other things. I mean, if you look at the trends in food, over the last 40 or 50 years, we really went after this whole industrialization of food, GMO food, mass production of food. And over the last 10 or 15 years, people started to take a step back and say, hey, is this food good for us? Why don't we go back to the paleo diet, or why don't we go back to natural foods? And I think the same thing's going to happen with money. We don't need this genetically modified money anymore. We just need natural money, money that's naturally occurring, that has an actual cost in energy and time and labor. And so our technology is taking that natural money and bringing it forward, modernizing it, making it ubiquitous and making it transactable.
Yeah, and gold is always being discredited by politicians or bankers or economists because they have an agenda. They don't like gold because gold inhibits what they actually want to do. They want to redistribute wealth. They want to find ways to spend money they don't have. And so they want to get us to reject real money, free market money, in favor of their own money substitutes. But it was the convenience that kind of seduced a lot of people into accepting the fiat currency. And for a while, okay, it lost value slowly, but at least you can get interest on it while it was losing value. But now they've taken the interest away. You can't get any interest on your savings. To the extent that you put it in a bank, The only reason the bank that you're entrusting your savings in hasn't collapsed is because it's being backstopped by the government. But none of these financial institutions are inherently solvent. So you take all this risk.
We're confusing solvency and liquidity, and that's usually what happens at the end of financial market bubbles. Really, it's difficult to discern between liquidity and solvency. But back to your point, I agree. I mean, our ethos, Josh and I's ethos, has always been that we believe people should have choice in money. You know, if you want to use seashells as money, you should be allowed to. And so now, when people have a choice in a free market, gold generally ascends as money. It's always the time superior element because of the physics. It has nothing to do with economics. Take any item that you can touch or feel, through which you make any good or produce any service, and you'll find that it has what's known as a life cycle. It starts to decay from the moment that it's exposed to oxygen. And gold is this weird alien metal that, for whatever reason, at the inception of the universe, it had some thermonuclear reaction, and it's immutable. It's basically an immutable metal, and so it's always time superior in every economic transaction. And so in a free market, gold will ascend as money. But so long as we don't have a free market in money, people should still have the choice to use whatever money they want legally within the regulatory environment and within tax compliance as well. And that's what our platform does. It simply gives people a choice. They haven't had this choice. Gold has been relegated from a monetary asset down to an investment asset. Assets are inherently risky. In fact, I used to be a portfolio manager at a hedge fund, and one of the things you just mentioned, where we said the conflating of solvency and liquidity, well, I think there's an even more dangerous path that we're pursuing, where we're conflating securities, which are risk-based investments, with monetary mediums. In other words, people are essentially not holding on to unencumbered liquidity. What they're doing is they're holding on to securities, whether it's mutual funds or hedge funds or stocks, just because the historic volatility over the last few years has made it advantageous. But really, when you think about what a security is, it's simply an instrument that indexes a bunch of companies that are joint stock companies that take risk in the economy. And when they do well and they thrive and they prosper, shareholders get to float with that rising tide. And when they don't, the tide goes out. And so I think the point of money is money should be that the most secure of mediums in the economy. It's what's used to clear transactions. So it has to be time superior, and it has to transcend time by lasting. And we know that the only thing you can actually use in that way, are precious metals. But amongst the precious metals, gold is the rarest and also the most ubiquitous. It's the most adopted.
Yeah, and a lot of people will be critical, and they'll say, well, there's simply not enough gold. But the scarcity is what makes it so valuable as money. You don't want money that's everywhere, that just falls from the trees. It has to have some rarity to it to make it scarce enough to be valuable as money. But you talk about choice, right? Whenever people have a choice between a government-provided product and a free market alternative, they always choose the free market. I mean, it's when government eliminates competition through regulatory barriers, where people have no choice and they're stuck with whatever lousy product or service the government wants to supply. That is the problem with fiat currencies. They're all produced by governments. And the reason they're fiat currencies is a legitimate currency is backed by actual money. That's where currency came from. It was a warehouse receipt for real money. The word fiat just means, it's out of thin air. Let it be made. It's not real currency because it's got nothing behind it. But if we could create choice, look, at one point, everybody in America used the post office. Why? Because the post office was legally putting anybody out of business that would compete with them. But all of a sudden, UPS came along and they got a little bit of the market, and then FedEx came along, and people started to say, "Hey, FedEx is better. It's more reliable. I'm going to pay extra. I'm going to use FedEx." And that revolutionized, and now of course we send mail through the internet, and so now the post office is completely
without
supplanted.
Competition in anything. You no longer have the right price signals being distributed to entrepreneurs. My view of capitalism is somewhat of an Austrian view, but it's also a natural systems view in that the most important moment in capitalism is failure. The moment where the entrepreneur fails or becomes insolvent is the moment in which the entrepreneur's assets are matched with the cash or the liquidity of the prudent saver. It's that moment where the profligate lose and the prudent savers win that creates upward mobility. And that's how you have that dynamism between the classes. And what we see today is those price signals are obfuscated with fake money. And that obfuscation of price signals leads to asset inflation and asset hoarding. Historically, all of these Keynesians used to be are opposed to the gold standard, though they don't ever read a lot about it, because they're concerned that the rich will hoard gold, creating deflation. Well, we have a way worse situation today where the rich are hoarding assets. They're hoarding assets because they know that they're going to print more money and cause the assets to rise. And the transmission mechanism for the economy is a trickle-down theory that the 1% of society will just sell off a little bit of assets and trickle down into labor.
Actually, what the central banks are doing is they're discouraging wealthy people from saving their money, and it's savings that provides investment capital for growing productivity and raising standards of living. And that's not happening because people aren't saving, but they would if they had a legitimate store of value to save. Instead, they're trying to preserve their wealth by accumulating assets because they can't store government fiat currency.
Well, they're in a rat race basically, and they're chasing a carrot that they can never actually catch. And we've totally lost, under any normal framework of security analysis, equities are way too high. And it's not just because it's 26 times earnings on the S&P. We don't know if those earnings are real. What are those earnings? The second that interest rates get normalized, if they ever do, that will affect everything. Supply chains, buybacks. There's a lot of reflexivity in markets when everyone all of a sudden realizes that that things aren't the way they seem. It's kind of like when you're in a theater and someone yells fire. Everyone has to rush through one exit. And unfortunately, some people are going to get burnt.
And this is why, too, though, the central banks aren't going to normalize interest rates because they don't want to open up that that can, and so they have to keep debasing the currency. They have to keep interest rates low. But when you talk about competition, I mentioned before, but with the internet, I mean, look at the way Airbnb is changing the way people book a hotel. Look at the way Uber is changing the way people hail a cab. The internet is empowering the consumer in ways that weren't possible before. But gold money empowers the consumer in the ultimate way, because now he's not just empowered to hail a cab using Uber, but he can pay for it using gold. And more importantly, he can save his money in gold up until the point where he has to use it. And now the Uber driver, though, the Uber driver can be paid in gold.
They can earn gold.
Yes.
My favorite use case for gold money is, it's really a platform that's accessible to everyone. If you're a saver and you're looking to start buying $1 worth of gold a day, you couldn't really do that before we created this technology. You can now do that. You can create an account for your kids. You can create an account that acquires $1 or $2 worth of gold every day and sends $1 worth of gold every day to your grandmother or your sister or your aunt. But I think the coolest use case is that you can now, for the first time, earn gold, which I think introduces a different mental calculation. And I'll give you a little example. You can open an account right now with zero balance, and you can simply send a link requesting gold from someone for a good or a service you may have sold to them. That person can now swipe a traditional credit card. They don't have to care about gold at all, just like they would with a PayPal invoice. And you've now earned gold.
Right. They're paying you gold even though they don't have any gold.
Exactly.
And it's
so you're seceding economic activity away from the fiat system into the gold system. And so every time you make that mental decision to send an invoice using gold money, you're pegging your labor, your time, your effort into an element, gold, as opposed to into decaying currency.
Right. And if the person you're invoicing happens to also be a gold money customer, he can pay you directly using his gold. But even if he isn't a customer of gold money and has no gold, he can still pay you and your account will be credited for the gold.
Correct. And I think the other great thing about the platform is once you have gold on the platform, you can send it to anyone else for free. So you can actually move the gold through the network for free. It's only when you get off the network that you pay a fee, or when you get on the network that you pay a fee. So think of it like a toll road where the on-ramp has a fee and the off-ramp has a fee. But once you're on, you can drive as long as you want. And we also don't charge you a storage fee.
And the fee to get on and the fee to get off is actually quite small. So once you get on, and of course, the more people that join you, the more places that you can travel without actually leaving that road.
Exactly.
And I think this is ultimately going to be the biggest revolution that's going to come out of the internet. You talk about e-commerce. Well, that changed. Yes, it changed people doing commerce where they did commerce on the internet versus in brick and mortar. But this is going to revolutionize all commerce because this is taking commerce away from fiat into real money. So it's not just e-commerce where you're using gold. This is a bigger, I think, change than any one internet company has been able to do because you're changing everything. You're changing the nature of the commerce itself because you're changing the medium of exchange, the medium of payment. And I think for a lot of people who have, a political agenda, you don't like what the governments have done, you don't like big government, and you're trying to do something about it. I mean, in many cases, going to the ballot box and voting is a waste of time because there's just not enough people that are going to join us to outvote all the people who have such a big vested interest in preserving big government. But where you can vote is where it counts with your money. You can vote with your feet. You can reject government money and put yourself on the gold standard. You don't have to wait for the government to do it. I have a lot of people in the United States, they talk about auditing the Fed. We don't actually have to audit it, just reject it. Just don't use their product. Don't use their money. Use real money and try to encourage as many people as you know to use real money too, so that the people that you're dealing with, the people that you're buying and selling from, if you can get more people into that money, then as we grow in numbers, that is a real revolution. And at some point, if the government is producing a product, if the central bankers are producing a product that the market is rejecting, because now they have an alternative, that can actually force real change. That can actually force the government to compete with gold money. And how do they do that? Well, they got to balance their budget. They got to stop printing money. They got to find a fiat currency that doesn't lose value. Well, you can't do that unless you adopt, fiscal restraint. Unless you allow interest rates to go up and unless you allow asset bubbles to pop. So if you really want to deliver fundamental change, if you want to force the governments to be responsible, it is having to compete with gold that's going to do it. And the way the public is empowered is that gold money gives us a vehicle to reject that money and to be outside that system, but still transact with everybody who still remains. Because if you have a gold money account, you can still get your debit card and you can still spend your gold just like anybody else is spending their dollars or their euros. The only difference is while their savings are depreciating, yours is not.
Yeah, I think my view is just a bit different in terms of I just believe people should have the freedom and the choice to use whatever money they want. And we've created a platform, as you said, that's quite revolutionary in that most internet companies, most payment companies, they're innovating what's known as the last mile, the outer layer. But they're not changing the settlement system. They're not changing the actual way that you exchange value. And what we've done is we've created an alternative settlement system, an alternative value exchange mechanism using gold. And I think that actually the more people use the system, not only does it empower themselves personally, but it empowers their own local community and government. Because ultimately, I don't think this is a zero-sum game where one currency can win over the other. I think this is a question of how do people allocate their prosperity to a better measuring stick? How do we use a better measuring stick to make sure we're following the right paths? I'm not a Malthusian. I don't believe that the world is going to end. But what I do think is that when we're not using the right signals and the right measuring systems in the economy, our whole society devolves.
And it's such an easy thing to do as far as opening up an account. Right? Anybody with a cell phone can just download the app for free. And what does it take? 2 or 3 minutes, and your account's all set up, and you can start buying gold or earning gold?
Yeah, about 5 minutes to set up an account. You can do it through a mobile phone or a desktop. Our new mobile app is actually coming out within the next week. We have 3 account types: a personal account, a business account, and a wealth account. And it really is a movement. We have about 1.2 million users now, and people really enjoy being part of this because they get to meet a lot of other people that are members on the network. They get to do business with one another. We recently had a member sell a car to another member, and they used gold to complete that transaction. We have businesses that use the service where they have tri-party relationships, and they used to use, say, 3 different currencies. and incur all these FX charges, and all of a sudden they can use gold and settle the currencies out once and not use any correspondent banks. And I think that this is really the power of this technology. A lot of your viewers may or may not have heard about cryptocurrencies and Bitcoin, and obviously we share the same view on cryptocurrencies and Bitcoin. But what cryptocurrencies and Bitcoin showed us was they almost like gave us a little bit of an imagination of how we could exchange value outside the banking system. We no longer need the banking systems to exchange value with one another. It's almost like a light bulb moment. And when you think about it, we always knew that. The only reason we used the banking system is because they paid us interest. You know, the conflation of credit banking and payments banking only took place because banks were paying us interest. And so now that banks have stopped paying us interest, which is obviously a centrally planned decree, if the market actually allowed interest rates to rise, they'd be much higher. The banks have become exposed. You know, they're not exposed in terms of liquidity, they're exposed in terms of nobody needs to use them anymore.
Yeah, and it's not just that they don't pay you interest. They also take incredible risks, and you're just betting that the governments will honor their deposit insurance schemes. But we found out with bail-ins that they may not do that because the governments actually don't have the resources to bail out the banks. If the central banks decide to monetize it, yes, you might get your money back, but you're not going to get your purchasing power back. So given the fact that...
It's a great point. That's what I think it comes down to. The more that I learn about this and the more that I analyze it, it really is a game of how can we cheat the people that have no voice, at the margin with purchasing power decay, and appease those that have a voice, with the least amount of purchasing power decay. But that's always the game. And so what happens in these bail-ins is sometimes like everyone has to take a cut, and that's where they have to take, $100,000 or something. But really, I think that if any of your viewers, I'm sure they already have, but the more they learn about, the fractional reserve banking system and the rate of interest. I'm reading a book called The History of Interest Rates right now. It's a 5,000-year history of interest rates by Sidney Homer, and it was recommended to me by Jim Grant. And there's never been a negative interest rate. There's never really been a zero-bound interest rate. And why is that? It's obvious.
Yes.
You want to bring consumption forward, you have to pay a price. Why would I ever work for something?
There is a time value of money.
Exactly.
I mean, everybody prefers something today rather than something in the future. If for no other reason, we don't even know if we're going to be alive in the future.
Exactly.
So there is a value to having something today. That's why you have to, you discount things forward, not backwards.
And that's another interesting point about gold. When I was trying to wrap my mind around gold as a hedge fund manager, the only thing that made sense to me was when I looked at the physics of gold, and I realized that really gold was time superior. It was the only thing that allows you to cheat time. Really, any other mechanism you try to use, you could buy a good share of a stock like Apple, but you're making a bet on management. You're making a bet that a hardware company that has a leading hardware product today is going to succeed, and a lot of people did that with Sony 30 years ago and failed, or Nintendo. And so every single company, in my office I have a stock certificate of a company called Standard Rope and Twine, and it was a Dow component when Charles Dow put the original index together, and now it's basically wallpaper. It's worthless. And Standard Rope and Twine was a Dow component that's been reshuffled.
Oh, you should see all the stocks that were popular in the 1960s when they had a huge
the Nifty
bubble.
50s.
Well, most of the Nifty 50 probably didn't go bankrupt, but there were a lot of all kinds of electronic companies that came out. I've got a whole drawer full of certificates where my grandmother bought these stocks, and I just have the certificates now. They're worthless because the companies went out of business, but they all had fancy names, and they came and went in that last bubble. But the most important, I think, aspect of this is people, they hear the word inflation all the time. They don't really know what it means. They think about rising prices. But inflation is really just the creation of money, the debasement of money, and people should think of it as a tax. And it is the most regressive tax. It hits the middle class and the poor the hardest. And now you've got these, big groups, this Fed Up that was protesting, poorer people demanding that the Fed not care about inflation and just print more money because somehow they think it's going to create jobs.
And Fed Up, if you actually dig into it, it's a little suspicious. It's like they got everything right except for the premise.
Yeah.
But I will say one last thing on this. I think a great way to understand inflation in freely floating currency environments is visualize a horse race with 190 lanes. and each lane is reflective of a government-issued currency. And then you say go, and the race begins. And at any different slice of time, you could stop the race, you could pause it. And what you would see is a relative value of each horse to the other, each currency to the other. And that's all we know about currencies. When we look up the value of currencies, we're not actually being told the rate of decay when we measure them against each other. We can only know their position at any moment in time against each other. We know the euro is 112 versus the dollar, and the pound is 133 against the dollar. But as that race continues, the finish line is zero. They all end up at zero. So they just end up at zero at different places. Now, gold is the baseline. It's the starting position. And so when you measure gold against currencies and you plot it out in a graph, you're able to see that, as Peter said, over time, it's very simple. There just becomes more money floating around, and that's inflation. And that money finds its way to everything: goods, services, assets, and labor, wages. But what's great about gold is it's the rarest element in the earth that requires energy, labor, time, and effort to produce. And then once you produce it, it lasts forever. There are a few rarer elements, but they're toxic. There are a few more abundant. There are a few more abundant elements that can last forever. But gold has just got that perfect sweet spot. And so what's great about it is all the gold ever mined exists as one large stock. So the price of gold is reflective of trillions of dollars of stock. It's a real market price. And so as you kind of stretch that graph for gold over time, it's just a really good way to measure how much money's floating around.
And meantime, all these fiat currencies will change in value relative to one another, but they're all going to be losing value relative to gold.
The finish line is zero.
Yeah, all you're doing is trying to pick which one loses value the slowest. But you might as well buy the one or own the one that doesn't lose value at all. And the point I wanted to bring up about inflation and thinking of it as a tax, right? Most people want to avoid taxes if they can. They'll try to minimize their income tax. That's the tax that most people think about. How can I, try to minimize or lower my income tax? Well, the inflation tax is probably the most important tax that a lot of people need to avoid. And it's actually pretty easy to avoid it. Just don't save in the currency that is being taxed through inflation. So to the extent that people can divert their liquidity to gold money, just, whatever money you don't invest, if you don't want to use it to buy stocks or you don't want to spend it on products, you have money that you've saved.
This is a great point.
Just save it in gold. I mean, I have clients at Schiff Gold that they think about, I want to buy some a certain amount of gold. Okay, fine. Buy your gold that you're going to hold as a long-term investment. But why have money in the bank account? Why have cash? Put that in gold too. Because you can use it, you can spend it, but in the meantime, between the time you acquire the gold and the time you spend it, it's not losing value.
And again, so remember, you in your journey in life are going to be earning money and giving away money all the time. That's part of your working capital. You're earning money, you're spending money. And so if you have made the decision, the conscious decision that you want to own gold in your investment portfolio because you think that over time it's going to outperform cash, that means that by definition you shouldn't be using cash either. I look at, in my personal life, I expose myself to gold as my liquidity, and I only spend fiat when I need to. I want to have the minimum exposure to fiat. And a lot of people, especially on some of these videos in the comments section, will say if you don't hold it, you don't own it. And that may be true for you. You may want to own the majority of your physical gold underneath your pillow or at a local safety deposit box. And of course, we'd love for you to buy that metal through Schiff Gold. But you're probably going to McDonald's or to the restaurant using your Bank of America debit card. And I bet you that Bank of America debit card is connected to a checking account at Bank of America where you get your paycheck into. And so what I propose is, why don't you try, instead of using your bank, which obviously is inferior to a gold money structure, use gold. And it may not replace your don't hold it, don't own it ethos, but it will certainly allow you to protect your purchasing power just a little bit better, and will also introduce you to the other use cases and allow you to become part of the movement.
Well, because if you're going to have a bank account anyway, and you're going to keep some money in it, why not reject it? You can open a gold money account for free instead of your bank account. You can keep that cash there. You have the same access to it with a debit card. You can make payments. I mean, the only thing you can't do is you can't write a check. But not that many people are writing checks.
We're working on that too. Yeah. Remember, we've only been around for 1 year and 5 months. The company Gold Money has been around for 15 years, and that was the company founded by James Turk. But the technology underlying all this and powering all this was developed by myself and my team over the last 15 months. And so every month you're going to see more innovation, more development. We are a publicly traded company traded on the Toronto Stock Exchange under the symbol XAU. And we have a lot of access to capital. We've raised capital for some of the world's most famous investors. And so you'll be seeing a lot of innovation. So something like a check, you'll be seeing something very soon. There's a lot of very interesting things we're working on that I think people will be excited about.
Yeah, and I think this is just the tip of what's going to be an enormous iceberg. And, we don't even know how big that iceberg is going to be. I mean, as we build out this community of people who want to own real money, who want to transact in real money, who want to save real money, who want to earn real money, as this community grows, we can start layering all sorts of services on top of it.
Exactly.
That will just grow organically from within the community. And everybody who becomes a part of the community is now going to experience something greater than what they were before they joined.
Yeah, that's the value of a network effect. When more nodes join a network, the switching costs become high, and the value, the utility of the network grows. And I think that's certainly what's happening here. I mean, remember, we already are looking after close to $2 billion of metal. We have more metal in our system than many nations. And I think that's a pretty incredible feat in just 15 months of work.
Yeah, and I think the growth curve is at some point it's going to really accelerate. And in the meantime, though, our people who follow me should do what they can to set up an account. You just got to go to goldmoney.com, right? Either on your computer, on your cell phone, set up an account for yourself. But more importantly, you make it very easy to invite other people, friends that people that you work with, to invite them to join the community. Right? They can set up an account, doesn't cost any money, and introduce them to gold.
Yeah, so we have a program called Golden Heart, and you can earn gold not just by pegging your labor, your efforts, your goods, or your services. You can actually just earn gold by inviting a friend or a family member into the platform. And the way you do that is you actually click, once you've opened an account, a Gold Money account, you click on the top right of the screen, and there's a little Golden Heart icon. And that icon will introduce a window with a unique URL, goldmoney.com/r/some type of a code. You can then take that URL and you can broadcast it on Twitter, on Facebook, on LinkedIn. You can send it as an SMS to any phone number in the world, or you can put it in a YouTube video. And anyone that signs up from that point forward with that link, you'll be earning free gold, they'll be earning free gold, and when they make a deposit, you make another a little bit of a bonus. And so we've given out over $1 million this way over the last 15 months. And we think it's a great way for people to just familiarize themselves with the platform and enjoy the experience.
Right. So not only do you tell your friends about a product that is going to be valuable, but you get compensated for your efforts in doing it. It's like all of the customers are helping to market the program.
Yep.
And so instead of spending money on an ad campaign,
Yep.
Well,
the way I got the idea was I was reading a book called 0 to 1 by Peter Thiel, and he was telling the story of PayPal and how they were really frustrated that PayPal wasn't growing. And so around 1999, 2000, they came up with this idea of this refer a friend program where if you were a PayPal member, you would refer your friend and you'd get $10 and they'd get $10. And they got about 1 million users that way. And so we thought we could do a better job with gold.
Yeah, I hadn't even heard of that book. Because when I did my Europac Bank and I did the debit cards, I did the same thing. But where I said, hey, why don't we let people refer people and we'll pay them, and that way instead of that's like our advertising budget. But we have our own customers that are doing the marketing for us. But now the more people that we bring into the system, of course, if you want to earn gold, you want to have your customers have the ability to pay you gold.
Exactly.
And so just growing the network serves everybody's interest because we've all made a decision that we want to reject fiat currency. We want a reliable store of value. We want to conduct commerce in real money. And so we need to have as many people who want to join it. But the beauty again is even if somebody is on the outside, they can still transact with us through the fiat world.
Correct. It's interoperable. The whole point of gold money is that it's interoperable with the existing financial system. So you don't have to worry that by being in the gold money realm, you can no longer go to the local ATM machine and withdraw US dollars. You can always continue to do that. It's just that once your value crosses that threshold into the gold money realm, you are outside the banking system. Mm-hmm. You no longer have counterparty risk. You're in physical, redeemable, allocated gold bullion. And this isn't even like the historical gold standard. You know, the historic gold standard that we learn about, we read about, and that we hope to come back to was actually flawed because it was fractionally reserved.
Yeah, and this is
a fully reserved gold
and
standard.
this is not like a bank account. This is like a safety deposit box at the bank. Because when you have a bank account, that's not your money anymore. Once you give the money to the bank, you're just a creditor of that bank.
Exactly.
But when you put your money in a safety deposit box, that's your money, whatever you put in that box. But you know they charge you for the box, and you have to go down to it to get what's out of it. What you're giving somebody is a digital safety deposit box where they can keep real gold. They can have it whenever they want, or you will give any portion of it to any third party that they direct it to be sent to. So it is your gold all the time. It's just that you have all the convenience of fiat currency without any of the downside.
Exactly. And I think that's the real way to think about it. Inverse the way you think about gold. Stop thinking about gold as some hedge against the end of the world, and start thinking about gold as a tool that allows you to minimize your exposure to fiat currency. Because the fiat currencies are depreciating, and don't let the 28% peak to trough decline in gold from 2011 to 2015 confuse you. You know, the beginning of 2011 we were at roughly 1350 at gold, and within 4 months we ran up to that 1900 level and then quickly receded when we literally thought the world was going to end when the European bail-in started. But really we're still at that level. The path of least resistance for gold is quite clear. We have to go higher. They can't raise interest rates, as Peter so eloquently said earlier, which means we're going to have to end with some type of an inflationary event.
Yeah, and so far, you know, in this century or this millennia, gold has outperformed every fiat currency by a substantial margin, and it's just getting started because we know that as these central banks dig themselves into a bigger and bigger hole, the only thing they can think of is to keep digging, and so it's the case for owning gold is going to become more and more compelling over time. So I think the sooner people could recognize this and basically drop out of the fiat system and adopt a gold system, the better. And gold money gives people the ability, a vehicle to do that right now,
and to do it over time. So you don't have to think about, you know, you're taking your life savings and you're buying gold at $13.25, just like you wouldn't buy, you know, a share of stock, or just like you're not exposed to the U.S. dollar. Your peak wealth isn't going to occur at the beginning of your journey in life. What's going to happen is every month you'll save a little bit more money. And so our technology, our platform, allows you to earn gold over time. And so you're building an average cost essentially. And as we know, over time, gold does one thing against currencies. So that's another, I think, interesting way to look at it and do it. And that's how I personally do it myself.
All right, great. Well, look, I'm glad you had some time to come by. Roy's been here in New York, visiting from Toronto, spending some time with Schiff Gold, and I know he's going to be down here for the month of November, so I look forward to working a little bit more closely.
Yeah, we're excited
with you guys and introducing all of the Schiff Gold customers to the Gold Money technology, and even my brokerage customers at Europe Pacific Capital. Everybody should have a Gold Money account without exception, because it's better than a bank account. Why have a bank account when you can have a Gold Money account?
Thank you so much. It's truly an honor. Thank you. Cheers.
You're going to start to see money losing value, not over years or decades, but over days and weeks, as central bankers continue to prevent this massive financial bubble from deflating. So I think this is really the time for Gold Money. And what I'm so excited about is that Gold Money is actually enabling all the things that I've wanted for gold. I mean, I've been selling physical gold for a long time, but I've always known that gold could play a much larger role in my clients' lives. And a lot of the things that I would think about at night that could do with gold, Gold Money is actually making all that stuff possible. So let me introduce Roy and let him talk a little bit about the company and kind of address some of the concerns that my clients have, because
and once you had the physical gold itself, it wasn't transactable. You couldn't spend it. You couldn't go to the supermarket and use one of these to purchase some coffee. So what we looked at is, how do we take gold, as you said, from the idea of gold as money, it has always worked throughout history. It's really the last 50 years that we're living in this financial bubble, this money bubble, so to speak. And I think that we've seen this trend with some other things. I mean, if you look at the trends in food, over the last 40 or 50 years, we really went after this whole industrialization of food, GMO food, mass production of food, and over the last 10 or 15 years.
Well, I'm sitting here with Roy Sebag, and Roy is the CEO and founder of Gold Money. And most of you probably know by now that I recently announced that I was merging Schiff Gold with Gold Money, and that the two of us would join forces to help revolutionize money. And in fact, normally when you talk about a revolution, you talk about progress going forwards, but we're actually going backwards to something that's really worked, which is gold, but then modernizing it for the modern era and actually making gold work better as money today than it did 100 years ago or 1,000 years ago, because with the technology that gold money taps into, today is actually the best time in history to be on a gold standard. When people try to say, oh, gold standard doesn't work, it's old fashioned, they don't understand gold, they don't understand money, and they certainly don't understand money substitutes, the fiat currencies that people are using today instead of money. And one of the reasons that people do that is because government really monopolized money. They made it more convenient, but they also codified it into law as legal tender. They accept it for taxes, but it has a fatal flaw in that it constantly loses value. And you can't really have money that loses value over time. And the problem is, the decay curve, I believe, is about to rapidly accelerate, where your clients want physical gold. And they may initially be skeptical of gold money, but let Roy explain why gold money is physical gold. It's not some kind of third party. It's not paper gold. It's real gold that you own. It's just that you have a lot more liquidity and it's a lot more convenient to use.
Yeah, thanks for having us here. It's been great to catch up in person again, and I think that the most interesting way to look at gold money is as essentially an operating system for your gold that's enabling you to hold physical gold. Before we built this technology, physical gold was somewhat inaccessible to most people. You had to buy in large denominations. You had to pay for your own storage, your own insurance.